Welcome to the Forex and CFD Market Focus Report for Thursday, October 3, 2013. Taking a look at our calendar today, we saw an improvement in the Australian Performance of Service Index to 47.1. That helped give the Australian dollar a little bit of a boost today. In Japanese weekly portfolio flows data, we saw a dramatic increase in Japanese purchase of non-Japanese bonds, and we saw foreign investors almost double their purchase of Japanese equities. We saw a nice improvement in Chinese services PMI, and this also led to a bid for the Australian dollar. We saw an improvement in Italian services PMI. We saw an improvement in French services PMI. We saw an expansion, yet a pullback, in German services PMI. And in the Eurozone services PMI, we saw an increase, a tick higher to 52.2. Also, the composite services and manufacturing PMI for the Eurozone also improved to 52.2. UK services PMI came in a little lighter than expected, but we're still quite strong at 60.3. Later on in the Eurozone European session, we await Eurozone retail sales data. And in the U.S., we await weekly jobless claims, challenger job cuts, and services ISM. We also have a lot of Fed speakers on the docket today, including Dallas Fed President Fisher, Atlanta Fed President Lockhart, Fed Governor Powell, and others. Let's go ahead and take a look at some asset classes here today. This is a daily chart of gold against the US dollar. We can see gold is currently trading around the 1310 area that we can see here. After coming off about $40 on Tuesday, gold improved yesterday, rallied higher, closed up about $28 on the day. The ongoing closure of the US government is adding to volatility in gold. In silver, we saw a move higher yesterday following Tuesday's sell-off. And today we can see silver is trading around 21.61, a little bit lighter on the day. Moving over to the energy asset class, we can see that Brent crude futures are trying to add to yesterday's gains, currently trading around 108.38. The energy complex is also being impacted by the closure of the U.S. government. As the federal government remains closed, there will be less demand for energy products in the U.S. and elsewhere. West Texas Intermediate futures are a little bit underwater today, currently trading around 103.41. Weekly supply inventory data in the U.S. came out stronger than expected yesterday, and this may keep a lid on prices. Nonetheless, we saw a very nice move higher yesterday in WTI futures. Let's take a look at some FX activity. Here we can see that the Japanese yen is the weakest across the board. The Japanese yen complex is down against major currencies. In contrast, we can see the euro is the strongest currency against all other currency pairs today. Let's go ahead and take a look at our individual currencies. This is a daily chart of the US dollar daily activity index. We can see there is no intraday bias to the US dollar, currently trading around the blue neutral line. However, we can see over the past several days, and in fact the past several weeks, the US dollar remains quite weak. As we mentioned, the US government remains closed, and we have a number of Fed speakers on the tape today. Yesterday, Boston Fed President Rosengren spoke, and indicated that the Fed voted to not taper QE3 last week on account of growth not meeting economic forecasts and on account of fiscal uncertainty. In the euro, this is our daily activity chart of the euro. We can see it has a nice upward bias and intraday trend higher against other currencies. We saw the generally better than expected services PMI data out in the Eurozone today. Yesterday, the ECB voted to keep the benchmark refinancing rate unchanged at 0.5%, as expected. ECB President Draghi spoke yesterday and indicated he has convened a panel at the ECB to study options to inject additional liquidity into the financial markets and the banking sector. Those measures will likely include new long-term refinancing operations, or so-called LTROs, and additional measures. It is interesting to note that the euro is now trading at an 8-month high against the US dollar. This is our Japanese yen daily activity index. We can see a nice downward trend in the Japanese yen. It looks like it is a risk-on day, with traders not flocking to the Japanese yen. The Bank of Japan's policy board convened a 2-day policy board meeting today and are deliberating monetary policy. Most traders expect the BOJ will keep policy unchanged. We await any remarks tomorrow from the bank and BOJ Governor Kuroda. Some traders believe the yen is losing some sentiment on account of a failure by Prime Minister Abe to announce a reduction in the corporate tax rate. That is following this week's decision on October 1st to raise the sales tax rate to 8% from the current 5% level. Abe also announced this week a 5 trillion yen supplementary budget. We saw the strong UK PMI services number. We see a little bit of a upward bias here today for the British pound on its daily activity index. Our big news in the UK continues to be the outperformance of economic data and the potential impact on monetary policy by the Bank of England. Moving over to our Swiss franc, we also see a little bit of a nice upward bias here in the Swissy. There are no major Swiss economic data scheduled for release today. We can see in recent days the Swiss franc has traded mostly above the blue neutral line. That is after trading below the blue neutral line for the second half of August and the first half of September. This is our Australian dollar daily activity index. It is trading marginally above the blue neutral line after declining yesterday. We saw the better than expected Chinese data and the better than expected Australian data. On the interest rate front, interest rate markets are now pricing in about a 43% chance that the RBA will reduce interest rates by at least 25 basis points between now and February. This follows RBA's decision earlier this week to keep its benchmark rate unchanged at 2.5%. Notably, RBA did not mention the overvalued Australian dollar in its policy statement. The Canadian dollar is a little bit above water today, a marginal upward trend, an intraday bias higher for the C dollar. We can see here that over the past several trading sessions, the Canadian dollar has been below water, has had a nice intraday trend downward. That appears that it has reversed today. We'll see what happens during the North American session. Finally, we see a nice move lower by the New Zealand dollar today. This intraday trend lower is in contrast to yesterday's move higher. Interest rate markets are currently pricing in monetary tightening by the Reserve Bank of New Zealand between now and June. RBNZ Governor Wheeler published a report on the RBNZ website that indicated interest rates are likely to move much higher, probably by at least 200 basis points, between now and early 2016. That is in response to the dramatic increase in house price and property inflation in New Zealand. Let's go ahead and take a look at some cross rates, some majors where we had some really good trading activity today. This is a daily chart of the euro against the Japanese yen. We can see the euro came off during the Australasian session and almost perfectly tested this red support line. That is the 132.09 area, and that represents short-term Fibonacci support. The euro then took out key resistance and selling pressure around the 132.76 area, that is this line here, and then tested key short-term Fibonacci resistance at the 133.17 area, that is this light blue horizontal line here. So this represented a very clean and nice intraday technical trade for the euro-yen cross. Moving over, we see the daily chart of the US dollar against the Canadian dollar. We can see the US dollar sold off during the Australasian session and perfectly tested this 103.14 support line here, this red horizontal line. It then moved higher, retracing some of its intraday losses. There's been a little bit of a bounce here over the past couple weeks for the US dollar. Any additional buying pressure we would expect would test the 103.74 area that we see right here, followed by a test of the 104.19 area that we see here, some upside technical resistance. This is a chart of the daily chart of the Australian dollar against the Swiss franc. We can see we have an inside bar here today. Let's go ahead and take a look at these levels. We can see today's intraday low is right around the 84.51 area. That's this red horizontal support line here. And then today's intraday high is right around the 84.73 area up here. That is this red horizontal line here. We've seen over the past couple weeks move lower on this cross rate. Any additional weakness, we would expect a test of the 83.85 area here, followed by a possible test of the 83.58 area here, and then the 83.05 support area line comes in down here. We also have a yellow downtrend line that the cross rate may have to contend with. Finally, moving on to the daily chart of the British pound against the New Zealand dollar. We can see that sterling came off during the Australasian session, perfectly tested this 194.40 area here, which represented support, and as we can see from this blue up arrow, that was just above some moving averages on this daily chart. Sterling then moved higher to test this 195.62 red area that we see here. That was a perfect test of that technical resistance, and it then backed away after testing it. Any additional strength on this cross rate, we would expect a test of the 196.83, followed by the 198.34 areas. We thank you very much for tuning in to today's Forex and CFD Market Focus Report.